Hello, everyone. Welcome aboard. Good to have your company on this Monday, the 4th of October. Does that mean 2 months, about 11 weeks to Christmas? Don't tell anybody. It's nice to have you on board as always, and I'll be joined by Ash, as I always am, in about 5 or 10 minutes when he has got all the late mail on what's happening around the footsie and in London town. He'll be sharing that with us, of course, as he always does when he comes in. Welcome to those who are new and haven't been in the room before, or certainly on YouTube or any of the social media channels. Great to have your company. We hope you enjoy the next hour or so and maybe get some information that is not familiar to you. If that's the case, feel free to ask questions. Chat box is there for that very reason. And if you wanted to come into the room and join us, you can just throw your hand up and even talk to us live on this forum if you so choose. More than happy for you to do that. That's what the show is all about. It's a sharing show. That's why it's called Trading Buddies. And you are now officially a trading buddy of mine. And I'm ever so glad you are. We'll also, of course, try and find you some money through trading. That, of course, is what it's also all about. And if we can achieve that, then happy days. Also, we would be sharing a little bit of our knowledge and experiences. So if you so choose. Hi, SF. How you doing? Hope you had a wonderful weekend. I had a good weekend. It was big footy game here yesterday. And we are now 1 hour less of our lives today because we've thrown it away and cast it to daylight saving. So those of you who are in Oz will be here at a different time today, of course. Next month, the show will change in terms of timing because London will go off daylight saving, and for that reason, the opening of London session will occur 1 hour later, which means, of course, so will the show. All right, let's get on with the job, shall we? And go to our first. I think I'm sharing that screen. You should be able to see my pound US dollar 1 hour chart. And that, of course, is the first place that we. Happy Monday to you too, Paul P. What we try and do here, for those of you who are new, is select a range from the previous 24 hours. So, in other words, Friday in this case, and so far today being Monday. And of course, tomorrow we'll look for the 24-hour period on Monday and price thus far on Tuesday. Now, what we attempt to do here is get a range that we can actually trade, but I don't see a range here right now. I see a range in today's price action and through US session, yes, or late US session on Friday, but I don't see a range from opening bell on Friday. That doesn't make sense to me. So I won't be trading that breakout. Propensity for it to go long from here, yes, definitely. But your monthly pivot's in the way. Propensity for it to go short. Look, it's there, certainly, because we're an untested daily pivot, but that's probably all I've got for you. I think this is going to hang around in here a little bit today. Of course, anything can happen, but if I'm honest to my own self, I'm thinking, yeah, we might break the range, but then I think we'll come back and break it on the other side as well. That's a forecast that may or may not happen. And if it doesn't, and the breakout takes place, so what? It doesn't really matter. But I'm not going to play the breakout today. There you go. So what am I going to do today? I'm going to have a look very, very shortly at, just excuse me for 2 seconds. I have to do something over here. I'm going to look at the weekly game change bars. Now, I'll probably have to explain that. And those of you who are in the room consistently and know exactly what I'm talking about, just bear with me for a couple of minutes, because there are a few new faces, and welcome to you guys. Great to have you on board. I need to explain to you what a game changer bar is. Now, a game changer is a candle bar, call it what you want, that changes direction, right? So the direction of the previous day versus the current, or what we're looking for on the current day. So on Friday, or the week in this case, because we're starting the week, we go with the weekly candle. The weekly candle last week was clearly bearish, and the most important part about that, from my respect, is it had a high higher than the previous day, so previous week, and it closed on or near its low. Now, it's a little bit subjective, I do understand that, but if it is close to the low of the week, and of course, if we're using daily bars, it'll be the day. I keep saying daily, don't they? Obviously, because I do that more often than weekly. But if it does close on or below, on or about its low, and its high is higher than the previous week, then that is what is a game changer bar for me. Now, that suggests that the price is going to go lower for the week. Now, it may not happen today, it may not happen tomorrow, it may not happen at all, but that's what the suggestion is, and that's what we're trying to figure out and trying to achieve. So sometimes we do trade the bar as is. If I like the scenario, I will do exactly that. If I don't, then I'll probably stay out and look for something of a better entry that suggests we can go short. The reason I wouldn't trade this bar at the moment is very evident to me, and it's that, I'll make that a bit bigger for you. It's that horizontal line right there, and it's preventing me from taking that weekly bar, because I won't trade straight into that support level with a very, very, very poor reward to risk ratio. So your entry is going to be there at the bottom of the bar. Stop loss is going to be above it, probably a little bit more conservative, get your stop loss above there. And then you've got to trade into that line. No thanks. And then there's another one just below where the lows of those candles are. So no, I won't be trading that. Pull back to the pivots, most definitely. So I'll be looking for this maybe Tuesday, Wednesday. And if it does set up as a rejection bar of those pivots, maybe a high test bar, which looks something like that. I love to have a green body on those high test bars. Why? Because it gives me an insurance that if price goes with the direction of that candle, it'll go long and won't take me into the trade. However, if that's not the case and it comes back to the bottom of that candle, it should have enough momentum to take us to the next level, which is precisely what happened there. Okay, so yen, it's a no for me on euro yen. The second of them was euro kiwi, and again you can see a massive game changer bar there, higher than the previous day, closed on or near its low. That's getting to the point where, okay, it's nearish, but is it on its low? Easy decision for me here, because exactly the same reason that I wouldn't trade euro yen just yet, or certainly not that candle, is because we're trading straight into support level. So the reward to risk there is very, very poor once again. So that is a no from me. And they were the only two game changer bars that showed up on the weekly charts. And therefore, as yet, we have nothing to do in that regard. Now, if I'm analysing this chart, Euro Kiwi, I'm thinking, I don't think we're going short at all just now. I'll be looking for a higher low in here, having come off that support level. So I'd be looking for a higher low in here, maybe to trade it long. The interesting part about all of that is that on Wednesday, I believe it is, yes, Wednesday, or it might be Thursday, can't quite remember. Ash will come in and have a look at that very, very shortly when he has a look at the data coming up this week. We have the RBNZ, and believe it or not, they are tipped to raise their interest rate from 0.25 to 0.5 of 1%. That would be, and would make them the first of the Reserve Banks to break rank and go for the higher interest rate. The market had well and truly priced that in. over the previous couple of weeks, I believed, and we saw the Kiwi come off as a bit a result of all of that buying that took place on the pardon me, Kiwi dollar. Interesting now, I wouldn't like to be trading it unless I'm in the trade, of course. I wouldn't like to be entering the trade with the Kiwi in it just now, because I think that interest rate price rise has been priced into the market, and I don't think we'll see too much of a rally until that announcement is made. If they do go, then yes, I think the market will rally again for Kiwi. It probably won't be as dramatic as you might expect, given that the previous month or so has been a rally in that particular currency. So keep that in mind. Also tomorrow, we've got the Australian Reserve Bank, or the RBA, if you like. They are announcing their latest monthly statement, and nothing expected to happen there. And I would expect a very much a cut and paste statement as well. You never know. I don't see the RBA raising interest rates anytime soon, but then I'm no economist, and I'm certainly not qualified to assess what the RBA might do or might not do. So that's what I'm not looking at this week. What am I looking at this week? Three, really, and they're all around the Aussie. Now, I've got a little bit of a bee under my bonnet suggesting that the Aussie is about to go long. Now, in my Telegram group on Thursday or Friday, I think it might have been Friday, I can't remember. If you're not a member of that Telegram group, it's free to get into that Telegram group, where I update all the trades that I take. They're updated in there. And anything that I see that is interesting, I also put in there as well. I think you can join that underneath us here. There's a link to that if you want to join the Telegram group. Free, I think, for the first month. And if you want to stay, I think there's a small fee attached to that thereafter. I'm not sure about that, to be honest. There it is. Angel's just put that into the chat box if you wanted to join into the Trading Buddies Inner Circle Telegram group. Okay, so why am I a little bit keen on the Aussie now? Well, I don't think it's got anything to do with the RBA, but it has got a lot to do with China. Now, again, I'm no fundamentalist, but I do see logic, and logic to me, when we're going into a winter, predicted to be a cold winter, and we do have what's reported to be a fuel crisis in not only the UK, but in China. Now, China loves Australian coal, yet they have not been buying Australian coal. So when they do start to do that, I expect that the Australian dollar will rally and rally sharply. Excuse me, whilst I turn that off. So when that happens, I think we've got to be ready. When does it happen? Yeah, can't answer that question. But I would be willing to take a position based on a technical setup and hope to stay in that position. So Aussie Swissy is one of those on my watch list. Why so? Look, I guess it's more to do with the bigger picture than it is to do with anything else. And I'm almost tempted. I was almost tempted to trade this bar. I'm not sure what stopped me, to be frank, but there's always a reason. Sometimes I can't remember what it is. It could have been, I don't know, a packet of chips bursting in the background, who knows. But really, when I look at this chart, I think the reason was that I've only really had two tests on that trade line, and I wanted to see a pullback and get a more significant higher low in this vicinity. So in other words, creating an inverted head and shoulders. I may live to regret that, because I think that bar is quite tradable. Now, it's certainly not a game changer bar like we had in the 2 euro pairs, but it is a bar that I do like to trade. It's a big rejection of last month's monthly pivot, and it does have a red body, suggesting to me if price comes back to this area, it will go through it. Well, that may be answered very, very shortly, because we're there. I still like to see a genuine setup. Now, when I trade, I like to trade a setup, not just a price. So I'm looking at here a mess, and the mess is probably the reason I can't get in the market right now. What I would like to see, pardon me, as you see all these rejections of this horizontal level, and we're having another crack at it. I'd really like to see price get back underneath this line, then attack this line, which doesn't exist yet, and give me a bounce off the bottom of here again. So another test of the bottom of that rising channel, if you like. You can see the big inverted head and shoulders there, but a horrible mess. So what I want to see is price get back to here, then back above that trend line, retest it. It's going to take a long time. That's a daily chart. So I'm talking the end of the week, but that's exactly what I'm looking for. What would I accept to trade it? And I'm dead set keen to get long, right? RBA is an issue. It could rally without me. Absolutely could rally without me. But I'd be willing to have a look at the smaller time frames and see if I can get in that fashion. Another reason I wouldn't like to trade it long at the moment is we've got 3 pivots here that you could throw a handkerchief over. If you threw that handkerchief over those 3 pivots, you'd still have room either side. They are absolutely locked together. Now, when that occurs, that is a great magnet to price. And I would not like to be trading away from that area until it is tested. So that's why I want to see that breakdown, get back above and retest, then I can go long. But long is definitely my my preference and my bias. But got to have, pardon me, got to have the shorts first. Can I trade the shorts? Of course I can. I can trade the shorts if I get a false break of resistance. I don't see that at the moment, but if we got up to here, then back underneath and retested that way, I could certainly look to trade it short. That's Aussie Swissy. A lot will depend on what the RBA does tomorrow, and if they're a little bit neutral to dovish, we could see exactly what I'm asking. We could see it today, of course. What I'm asking for is price to come down here. Aussie yen is pretty much exactly a carbon copy of what I've just described, as you would expect. We've got a risk-off currency, the Aussie, versus 2 risk-on currencies, the Swissy and the yen. And for that reason, you're going to expect to see a very, very similar chart. So this is, again, pivots very close together. That often happens at the beginning of the month. But price takes a long while to get away from those when they're so tight. And for that reason, again, I wouldn't like to be trading long, apart from the fact that I'm going into a resistance area. So how do we do this? This is probably a better setup, actually. If I got price to come back to the pivots now, reject them, get above this little trade line again, then retest that in confluence with the weekly pivot, bingo, then I'm in. So I could trade from here. I've got to take profit before these highs. That's the only issue. And we don't want to be entering the market close to those. But on a 30-minute chart, 10 pips is really all I'm after there before I get to that price level. So that is Aussie yen. I don't think we've got Ash in the room. Ash, you here?
I am here, mate. Yeah.
There he is. You're rugged up. Is it cold there?
It's getting a little bit chilly, mate. Yeah, it's getting a little bit chilly.
Well, it is changing season, I suppose.
I am rugged up. Yeah.
So am I.
It's not the necessarily the outside temperatures, but it's been really wet, and I think because it's been really wet, it's just a bit dank, and for that, because it's really dank, it just feels a bit colder. So I don't know. I'm not sure whether it is out and out chilly or whether I'm just being a bit precious.
Listen, I've got one more to go. If you've got a trade before I do.
Yeah, there probably is a trade on the FTSE for a quick long this morning. I mean, we can have a quick chat about if you want the levels, and then we can come back to you.
Okay. Yep. I've only got one more that I'm keen on.
Okay, great. Well, we're fairly close to taking this trade on the FTSE. So, well, not fairly close to taking the trade necessarily, but we're very close to the price that could give us the opportunity. So what we have here is, just making sure everything is lined up for me, so I am ready to go if it happens. What we got here is a decent move back to the upside. Incidentally, I managed to fix everything up at the end of the last week after the massive move that we had all the way back down again. I managed to clear out all my shorts, which is great. So now we're back flat again. Now the FTSE's got a little pivot, which is somewhere around about this trend line. And this is why we've got to make sure we come back first. You know, if it comes back a little bit first, we can take the trade. If it hits this trend line and what will be the pivot, there's no trade. It's just too close. So I really want it somewhere along this trend line here, somewhere along this yellow line. So I'm looking for around about a 10 pip move to the downside. Let me just get this ready as well. And if it does that, then I will take the trade for a long, and I'll just aim for just between the two areas, this point to this point. The longer term buy zone is what's interesting here. If we have a look at these on here, and just let's do it like this instead. This is what you got on the price action, where it's just come into this longer term buy zone down here, and it just looks like it's not going to break through at this stage. So I think the longs are still on. There's no doubt that the picture's looking heavy, and there's no doubt that the picture's looking like we should be able to take a short on the FTSE that we can maybe even hold on to. I don't know whether I'll flip my strategy. Probably won't, because it burned me last week, and it took me a while to fix up. But it did fix up, because the longer term position or the longer term view of this is for a short. All I'm saying right now is that the short doesn't look like it's on today, and it might be after the ISM services PMIs tomorrow, maybe something like that. We could start looking at it, but I am looking for the long. So the long is going to be off. Lovely bar on the 15, as you can see. It could be that the long's going to be quite shallow, but I'm not going to aim for a shallow long, because, as I say, there's not a lot to aim for before we're taking profit. So I really want it to come back into this level here, and if it was to do that, which is only around about 8 pips below where we are now, but if it does this, then I'll be taking the long on here, and maybe it does it now. Let's have a look. Let's see if it can just pop down a little bit more for us and get us in. 95 pips. Need that 5 pips really. And as I say, it could be anywhere around here, and it might start to burst to the upside. But let's see if we can get the right price here, because that is a pretty shallow area. You know, we've only got 15 to aim for there. Now, if you enter here with a spread, oof, it's not too bad. It's not too bad, but it's not quite right, is it? So let's give this one a couple of minutes, and I'll tell you what, just stay with me for a little while there, mate. Stay with me for a couple of minutes and see if we get this, because I think it's probably going to be on the 5-minute close, and we're currently at 10:18. So if we're going to get it, I think it'll probably be on the 5-minute close. Possibly, if this 5-minute gives us a little bar, then we might see the next 5 minutes pop down, and then we can start taking the trade. And if that was to happen, maybe we don't get the opportunity, mate. I don't know. Difficult, isn't it, when you've got such a tight range to try and get from? There's no guarantee it's going to come down to the very, very small price point that you're aiming for. So I'm not sure whether it's going to make
good. We'll keep our eyes on it for the next few minutes. Interesting week ahead. Could be that we have the first Reserve Bank to break ranks.
Yeah, I find that quite surprising, mate. I have to say. I mean, I've got the Kiwi as a short, and the reason I've got it as a short is that they actually need to raise interest rates. Now, if they do it, then it changes the terrain completely. And the Kiwi all of a sudden starts to become a lot more of an interesting long. But
you don't think the last month or so of rallying on the Kiwi had that priced in anyway? Because they have been talking about it, right? They've been hinting.
Well, possibly. Hold on, we might be getting close here, mate.
Yeah. Okay.
Yeah, go on. Give me a couple more here. Give me a couple more. And I will take you. Do you know what? The problem always is when you kind of get a change of that 5-minute bar, and because this 5-minute bar, I'm not sure it's going to shoot down again for us. might have had the low. Yeah, we may well have had the low. Might be a missed opportunity, mate. The problem is we're dealing with such small kind of margins here, that this level may well be a little bit high. I mean, it's quite a coarse level that I've just marked off just because of that breakout level. So I'm not sure whether that's going to be good, but I don't think there's enough to aim for. If we don't get a touch here, I don't think there's enough to aim for to get us up here, and that's because of the spread as much as anything else. So I'm okay to ignore that one if it's not going to come down. But yeah, so back to the Kiwi, mate. Well, I think with the Kiwi, it may well have been priced in, but you see, the thing is that the way I'm not really looking at the price action first, I'm looking at the fundamentals first. So when I look at the fundamentals, what it says to me is the RBNZ need to raise interest rates, or they need to do some more monetary policy tightening to get some of the numbers back down again. Now, if those numbers start coming down, then the Kiwi would look like a long. Now, the question really from a fundamental perspective is not whether the price action, whether it's been priced in or on the chart, but are the numbers going to change significantly enough to cool off what's been happening in New Zealand if they were to raise interest rates? And I think that's what an economist will be asking. Is there
no, when you say numbers, you're talking about coronavirus?
No. I'm talking about the data. I'm talking about
right.
the growth numbers.
The fundamental data, right? Yeah.
So the fundamental data is coming in quite hot. Is the point from New Zealand? So if the fundamental data comes in quite hot, then that starts to suggest a Kiwi short. Because of the buying power, effectively, of the currency. So the one way they can curb the numbers coming in hot and increase the buying power is by raising interest rates. So the question is, after they raise interest rates, does it curb those they're not overheated, but those numbers that are coming in a little bit hot? Does it curb it sufficiently? And if it does, then yes, I think a Kiwi long is more than on. I wouldn't want to go short on a interest rate hike, to be honest, mate. I think that would be the wrong way to do.
Tough call.
It would be. I mean, I'd understand staying where you are for sure. Oh, here we go. Let's see if we get this.
Yeah, you need your price there.
Come on, just one last little push down for us. Give it to us here.
There's a question. How many people talk to the charts? Or under your breath, you say, I remember those days.
That'll do. I'm not sure whether it's going to quite. Probably will just right. That'll do. So we've got something to aim for here now, which is just this trend line up here. So that's all we're going to do. We're going to aim for that trend line up there, and see if we get something of some movement. Now, if we look at this on a longer term basis, now of course there's always potential fixing up to be done, because realistically the FTSE is in a downtrend. If we like now, let's go to some other analysis. We've seen this area here, a lower low and a lower high, so we are in a downtrend. However, what we are working on here is the fact that we're in a buy zone in a downtrend, which is right here. This is the buy zone. So the one thing about going long, one thing about when we see opportunities to go long in a market like the FTSE is on the short term is that if everybody was to trade the same way as me, for example, then I don't get too worried about taking on longs, as long as I'm not too keen up here. It does kind of sometimes mess things up, but down here I'm okay with this, because there are longs. The next long I'll probably take. It probably be. I mean, this will be one of the three. So I'm going to split this up into three. But I quite like this right now. Anyway, I think that this is okay. He's going to rally right the way through to here, which gives us room. Now, all I'm after is 10 pips. So I'm not bothered about that particular point. But we might see that the FTSE is able to rally to there. I don't know whether you want us to have a bit of an overview of the FTSE right now, mate, or whether you want us to come back to this, because we do need to check some other parameters to kind of give us an idea of whether this trade is going to work out.
Okay, well, come back to me and I'll go through that last one that I'm looking at.
Yeah, do that.
And then we'll come and talk back to you.
We'll come back to me and we'll have a look at the numbers for the day and see what we got. And we'll have a look at some of the other signals that would suggest that the FTSE is probably okay here.
Cool. Okay, the other one that I did like this week to follow, which is a little bit counterintuitive if I'm looking to trade the Aussie long against the yen and the Swissy, because if that works out, then probably so will the Canadian dollar. But we do have OPEC meetings today, which will probably shape this one, I would imagine. But on the current information that I have, from a technical point of view, I've got a nice little range sitting in here, and we're bang on the top of it. In fact, we've had a beautiful little tweezer top sitting on the top of that range, and I'm looking very closely for a high. Now, it may not happen. Pardon me. There's something flying around my head. It may not happen on any of the smaller time frames, but I'll be looking very closely at the daily tomorrow. Let me go back there. So here's what I need to see. Well, I need to see a few things, but the first thing I need to see is a rejection bar. So a high test bar, one of these would be good, but better still, one of, where can I find one? That would be perfect. If I could cut and paste that over here, that's exactly what I'd like to see. And it goes back to exactly what I was saying before. If indeed, I love to trade these green bars short. If I get a green bar that's got a tail on the top, high test bar, in other words, that gives me the indication that if price goes back to the bottom of that candle, then the bulls are out of business and therefore the bears take over. If, of course, that is not what happens, then it's very much likely that the green on that bar or that candle will indeed be an indicator that price is going to take on these highs and maybe even set a new one. And that's fine, as long as we're not taken into a bad trade. So that's the theory behind it. A lot of time I'm asked to predict direction, and I don't care. I really don't care what direction it takes, as long as I get a setup that suggests to me that I've got some insurance in that if I do go in a direction, or if I'm trying to trade in a direction, I've got plenty of room between myself and market price, or my entry and market price, because that gives me that insurance that I like to see. And that's why I'm looking to trade green bars short and red bars long, because I've got all of that distance to gain momentum. So buy. And when they hit the top of that, there's going to be potentially, it depends on where I trade. But right here, for instance, if price comes back to that level, what do you expect would happen? It's going to gain some momentum there, because there'll be stop losses or buys. So if you're short here, your stop loss is going to be here. So if you trade that candle short, your stop loss is going to be here. And if you traded this move long, your entry is going to be here. Both of them will be buy orders. Okay. So a short stop loss is a buy. And if you're buying at that level, same thing. So that's why you can gain momentum at those levels. And that's why I like to trade in that fashion. So I'm looking for a lower high off the back of the double top, if you like. Tweezer top, call it what you want. It's a clear potential rejection area. So this is absolutely ideal. Down, back, then look to trade it short. So that's CAD yen. Look, if I do get it on a smaller time frame, then happy days, because I've still got a double top here. If I get a lower high that looks like that, for instance, up here, perfect. That's what I look to trade. Of course, there's always a but, and the but in this case has to be these pivots. I need to get profit in the bank before I hit that level, because the propensity for a bounce off those is extremely high, or even the probability of those is extremely high. So to limit my risk, I need to have profit in the bank before I get there. We shall see. But CAD yen, definitely a short for me this week, based on the chart pattern that I'm seeing. But if we get a new high here, or it's not really, but if we get a new high here, who cares? Again, I won't be taking the trade, I hope. And we come back inside that range, same thing. As soon as we come back inside, I'll be looking for a lower high. It may be that we break out here with decisive bar, something similar to that, for instance. If I see that decisively above the top of that range, then I would probably look to trade a one candle reversal. Let's not jump ahead, but that's all of those things are in play for me. One candle reversal, lower high, false break of the top, coming back in, giving me a lower high, and away we go. So that's it. CAD yen, Aussie Swissy, Aussie yen, different directions, might add, but they're the three that I am keen on this week. Mate, we'll get around to a trade of the week, I suppose, when you're done.
Yeah, just a quick hello to Joe. Good to have you in, mate. Not seen you for a while, which is nice to have you back. Yeah, let's get to the trade of the week. Now the FTSE's coming down, which is okay. Now I would normally be quite keen to add to the position now, but I'm not sure whether I'm going to do that. I think I might just leave this for now. Let's come back to the FTSE, and then we'll talk about some of the other signals.
G'day, SJ. Got a scalp for us, buddy?
So, FTSE is coming down. Looks like this is a really nice level to try and buy it at. But I'm not going to get in here, mate, just in case, because the market looks a bit heavy, as I say. Let's have a look at some of the other signals and see what the market's suggesting. Now, if this does go higher, it doesn't matter whether I get in here really or here. If it's going higher, I'm going to get the profit level. If it's going to come lower, I don't really want to add to a position. I'd prefer to save it until we get significantly lower. So I'm going to do that for right now. I'm just going to ignore this for a bit and see what we get. It looks okay to me, though, I have to say, mate. I would be quite surprised if this was to break down at this point on the FTSE. So what do we got on the VIX? Well, the VIX is moving to the upside, which is negative. We don't want to see this. It might run into a little bit of trouble here, which is another reason I don't think it would be wise to add to a position at this stage until maybe this moves into this area. If it does that, then that would be okay. We have got an S&P that is moving down. So it does look like we've got a general, just a bit of general negativity, and the S&P might end up all the way down here soon, which also doesn't really suggest that that the long is wise to add to. So we'll see if that was to come back. But certainly, if I look at this chart on the S&P, and we were looking at something similar, do I think the S&P will come back up here and test this area at some point? Well, I do actually, so I'd be okay with sort of like holding on to a long position at this stage. Now,
I wonder when we accept the fact that this is in a free fall, if it goes there. I mean, are we still thinking 20%?
I don't know.
I mean, I know you weren't, but.
Well, Jules mentioned the 20% drop, didn't he? Is it possible that we get it? I mean, I think it is. I think that there's enough out there that to suggest that that the markets are just toppy. It's really a question of timing, and I suppose this is the thing about today. The reason I've taken that long is because of the timing of the potential move to the downside. There is a lack of liquidity today because we've got the Chinese out of action all week, and that does suggest that any movements, any points where people are selling stocks, it could actually have a pretty significant move, but it doesn't mean it's going to stick. So we might get a bit of volatility this week without really getting a genuine message of what's happening. Because, as I say, the majority of people might well be holding on to their positions, but if there is enough that are starting to kind of sell the market off with a lack of liquidity from buyers, then it might well push the market down, because we're off for the whole week from a pretty big economy. Yep. So I'm not sure whether we could read too much just yet into a price movement. And as I say, Matt, I know the FTSE looks pretty heavy here. It looks pretty bad coming back down again, but it still looks all right to me. Look, I think this area holds. And I wouldn't be surprised at all to see us at least kind of come back up, possibly even test these highs here. I don't know if this is ready to go yet. If we're looking at the S&P, could be even carving out an inverted head and shoulders here. So we might even see this higher before we start to really collapse. These areas here could be that one. It might be that one. But they're both high. They're both way above where we are now. There's even a trend line here that would, well, actually that's been seen, isn't it? So it's possible that we have had the retest along here. There's the horizontal level, and that has been retested. So I guess it does have a green light to go. But it just doesn't look like today. This doesn't look like it's going to be today at this stage. Things could change quite easily. But at this stage, I still think that the FTSE is going to have a decent chance of holding here. Maybe it's under the trend line. Maybe this 5-minute chart is somewhat distorting the picture here. But I think the FTSE may well hold on. Now, if we look at the numbers, what would tend to drive this down? OPEC meetings could drive that down. We haven't had anything from that, but the numbers, generally speaking, today are quite light from the globe. So I'm not sure whether we've got the catalyst to come down. RBA statement. Now, if they do start to talk about interest rate hikes, then maybe there is this domino effect, and maybe that's when equities start to come down. So we're talking about 20%. 20% could definitely be triggered if all of a sudden.
With the RBA, mate, I don't think they'll be talking interest rate hikes.
Well, if they don't, then that will give the market some relief. If they're not sort of like basically saying, if we're not saying every single central bank is now going to start reducing liquidity and choking growth, then I think that we might still see some twists and turns in the price action, and that's really that makes things very difficult. And I last week, as you know, tried to hold on to a position because I thought it was going through, and it caused me all sorts of trouble. So right now I'm just right back down to short term again. I'm taking short term decisions. If the market comes down, I mean, I'll tell you what I did on Friday, which was great. I took 3 or 4 short term positions on the same day, because it was kind of like so clear what it was kind of going to do. It meant that, okay, I didn't hold on to something for a long-term move, but I kept getting in and out, and made the money of a day, and made the money of 4 days in one, because the opportunity was there. So I suppose if it starts to come down hard, what we can just do is hop in and out and still make a decent profit out of it, without necessarily having to catch the whole move. So I'm kind of going to stick with that, rather than sort of looking for that 20% move where I'm going to be holding on and potentially sweating on it. And my head just doesn't work very well that way. So, I
think you're bang on the money. I had 2 trades last week looking for all intents and purposes, though they were going great. We made money on them, but yeah, had we adopted the approach that you're just suggesting, where, okay, just let's get in now, we would have made a lot more money, because eventually, then they didn't even hit support or resistance. They just reversed for whatever reason.
Yeah.
Maybe because the computer said they had to, but well, actually, one was Aussie, so I could see the market sentiment move on the Aussie. So I actually tightened the stops up so we could make some money out of that one. But the other one was, what was the other one? Can't remember now. Kiwi Swissy. And same thing. the market sentiment changed from off to on,
Yeah.
off to on, off to on, and everything's going great while the risk is on. But as soon as it switches off, and that's what's happening. It's not.
It is.
It's not obvious. It's just reversing for no reason.
It is, and I think this is the problem, isn't it? Because if we try and pick the correct time for the big move, we could get caught in a position for quite a long time. So you know, I didn't really enjoy last week. It felt like hard work for me, holding on to those positions and fixing them up doesn't really kind of like fix up the fact that I didn't enjoy the week. So you know, when it came to it Friday, it was great. The market was down, fixed all the positions up, and then I could just trade nice and in and out and get back to business the way it should have been done. So I'm not gonna get myself caught into it now, trying to pick the big move down, because that's just not the way I trade. If it comes down and there's a long-term move to the downside, and we can still continue to hop in and around it, great. We'll do that. So at this stage, I mean, you know what the market's like, mate. You think you've got all the messaging you need to make a decision in a certain direction, and then all of a sudden it doesn't do what you expect it to do. And I don't know how often that happens. Sometimes it does exactly what you think it's going to do, but you can get caught almost overconfidently thinking that you've nailed where it's going to be doing this, that, and the other, and why it does it.
Yes.
But we're not party to every piece of information that the trading floors at JP Morgan and HSBC and all the kind of big banks are party to. So I think we've got to keep our powder dry as well and say, this is the way I trade. And I'll tell you what, this morning was almost case in point. There was a really lovely trade set up this morning that I could have taken and made money. But the reason I didn't was because of last week. I was like, no, I wait till the market opens. That's the way I trade. And as it happened, I would have made money. But I think that's okay, because the problem is you then start getting into bad habits. As soon as you kind of switch, you know, you can do it this time and not this time. You know, where does the line get drawn? Where you just say, just stick to the messaging that you know and trust, and trade correctly, because it's making you money. So you know, it doesn't matter how much. I always find, as long as you make a base level every month, then everything else is gravy after that.
Look, if you're starting to in your head manage trades, you know, in a micro fashion, every minute of the trade, two things are going to happen. You're going to go nuts, and you probably go broke as well. You've got to stick to whatever system you're trading. Simple as that. But that said, I'm very seriously considering, not whilst I'm in a trade, but before I go into a trade, changing my take profit or trade management, if you like, to get more off the table at my first, the same as you're doing, except you're getting out, at my first take profit level, rather than watch the take profit level get hit, no problem. But the second one doesn't even get a look in. And that's an issue.
I think
so you've got to adjust to that.
Yeah, the interesting thing is that you do. Personally, I do more work on the entry than I do on the exit. So therefore, it means that exits should be tweaked as time goes on, because you know, I know what I need to see to get into a trade. I know exactly what I need to see. But the thing is, when it comes down to an exit, what you're not looking for a price pattern, are you? You're looking at a level. So the entry is like, you know, you get all these things lining up, so you take your entry. When it comes to the exit, you don't say, right, when these things line up, I'm going to come out. You just set your level. So we end up doing less work on an exit than we do on an entry. So for that reason, I think that it's good that we tweak the exit strategy personally, because I think it needs tweaking. It's just not given the same the same time.
Yeah, look, it's the hardest part of the trade, isn't it? Where to get out. Really is.
Yeah, I think so, mate. I think so. Scalper just finishing the euro dollar short from 2 minute entered 11.6. I'll give a heads up when my next is approaching. Good man. Yeah. Did you meet Scalper, Joe, Jeff? Were you in when Scalper was in?
Yes, a couple of months ago, I think.
Okay.
But I haven't. I think we've spoken we spoken, Joe? I'm not
We
sure.
did, yeah,
I, I
we had
keep,
a little. We had a little sharing session, and as always, you know, he's as everybody is. Everybody's welcome into the room whenever they like to kind of give their opinion on their trade or any trade. You're welcome to come on, Mike, and you are too, Joe. So if you ever want to come back in the room, let us know.
and Joe's saying, yeah, I'm 80. He's not 80 years of age. He was meaning when we were talking about that, he takes 80 off at his first take profit level. Absolutely. Yes,
oh,
indeed.
Oh right, yeah. Sorry, I've just I've got back into YouTube now. I'm seeing it. Yeah, good man. Okay, well let's finish off talking about the fundamentals this week, mate, and see what we think might drive the market.
Yep.
Bank of Japan, Governor Kuroda speaking as well. We got some PMIs from Europe. Now, what's been predicted here is pretty flat, actually, which is all good. ISM services PMI coming down a little bit, which may well. I mean, you know, these aren't aggressive numbers by any stretch, but this is basically saying that this market, if we just look at the dollar here, trade balance assumed to pretty much stay flat. PMI, services PMIs flat. Little bit of retracement down with the services PMIs. Optimism's growing, and then Qual speaking. So Tuesday, you know, it's basically saying, yeah, dollar could strengthen a little bit. Unemployment change forecast to be higher, so maybe that sort of like puts a bit of a pay to that. But that's Wednesday anyway, so we got okay, cash rate from RBNZ, very interesting numbers. Do we want to try going into that? I'm not sure. Forecast to be 0.5%. Do you don't think they're going to be doing that, Jeff, or do you think they will?
I've got no idea, mate. Really, no idea.
Okay.
That's way above my pay grade. But I would like to be. I would like to be in a trade, free trading, just to see what happens. Because if they do, if they do, then yes, the Kiwi should rally.
It should, and you know, I was looking at the Kiwi, the Euro Kiwi last week, and it was my trade of the week as it goes, and it was pretty flat by the end of it. It didn't so it rallied initially, but then it was pretty flat by the end of the week. If you look at this weekly bar, it was slightly negative, if I'm being fair to what's honest, but it was relatively flat. But I looked at the numbers again this week, and the Euro Kiwi still holds up as a long. But if they raise interest rates, now that, as I say, mate, the question is, what does that do? What's the knock-on effect to the interest rates? Because if I was sort of like thinking about this from a fundamental perspective, and just to kind of like give everybody the idea of what I'd be looking for, if in Europe. Oh, I can't get rid of this stuff. Let's get rid of that. Get rid of that. It's me trying to get this practice to make this work for me. If in Europe,
was that Molly's?
I wish it was, mate. So you got the euro over here, and it's buying goods over here. Oh, look, it's working out quite well. And it's buying goods for, sorry, not the euro, the NZ. You got the NZ. And it's buying goods for a dollar, New Zealand dollar over here. And then the goods start going up in price. So then the goods sort of like now cost somebody $1.10. Now, if they're looking at $1.10, that means the value of their dollar has gone down in value, because they haven't done anything to curb this, and the price of the goods has gone up. So inflation, this is what we're seeing. So inflation's coming into play. It's now costing $1.10, but the wages are the same. You know, for the everyday person, your wages are the same, or your savings account's the same. Now, if they raise interest rates from 125 to 150, actually what happens now is the NZ is worth more, because you get more when you hold it in an account. So you put this into an account, and now you're going to get a better return on it. So because of this inflated price, it means that this 110 is absorbed, if you like. So that means that when we see the PMIs come out, then the Purchasing Managers Index is not going from 50 up to 51 anymore, like it did here. It's going maybe from 50 to 50. So that means that we can see that the NZ is gaining some value, and it's actually gaining some traction. So that's why the NZ becomes more valuable, and that's why we push it up. What we really need to see is, does this make any difference to this? Because maybe these start to outstrip it even further. Maybe inflation just gets so far out of kilt that that it doesn't really matter. In only New Zealand, obviously that would have to happen as well. That it doesn't really matter what the NZ do. It would be it's going to stay the same anyway. So it's still going to have a lack of purchasing power. So really. Yeah, so that's all I'm really looking for is, does that interest rate hike genuinely have the effect that it's meant to, which is to raise the purchasing power of the Kiwi? And you can only really know that in a month's time or 2 months' time. But I suppose the anticipation is normally that it should do, because if you just look at those numbers that we just on the whiteboard, it would suggest that it should, it should increase the purchasing power. So it should be okay. But we don't know. We don't know what would happen. But if it wasn't to, what's happening right now is, as numbers start to come out in New Zealand and they are hot, and numbers in Europe are weak in comparison, that should suggest that this is a long at this stage. But with an RBN, it might change that completely. This may well go nowhere. Yeah, very difficult, mate. I think it's a difficult one to trade. And it'll be a question, does everybody else catch up? And it's these things that all of a sudden become really important. What's Macklin going to say? Is he going to be starting to indicate interest rate hikes? Because if New Zealand go, and then central banks saying, well, we're going to go as well, I think the market's got more likelihood of believing that that's going to happen, because one's already gone.
Yeah, well, I didn't look at, when was Macklin last week? I think Canada, or the week before, was their Reserve Bank statement. I didn't look at that, so I don't know what he's likely to say. But yes,
no,
I think you're right, and I'm not suggesting that contagion amongst reserve bankers is going to happen instantly, but they will most definitely look at what the others are doing. There's no question about that. And yes, if they take a lead, then who knows? Yeah.
Well, this is the thing, and you might see some central banks sort of like saying, "This is great. You guys have moved. Now we don't have to." The likes of Switzerland, as an example, it relies on exporting, to countries like the United States. Obviously, with a weaker Swiss franc, then they've got greater trading power. So we may well start to see a little bit more of a kind of equal footing, which we hadn't seen for a while. When the dollar started, when the Fed started to come out and go slash, then all of a sudden the smaller countries and the smaller nations like Switzerland are like, well, this isn't good. This is not great for us. Now, all of a sudden, who's going to come over here, because they can get the same stuff, a lot of the same stuff anyway, from other nations, which are a lot cheaper than us. So I think there are going to be certain nations that are going to be really happy about this. They're going to be excited if this does start to become a trend. And then we got more numbers from the United States. Now, we know what Jerome Powell said. He's basically saying it's about employment from what I can read. So this becomes an important number, and Wednesday becomes an important number as well. I'm not sure whether this ISM Services PMI is quite as important as it was. But if we think that we know now, if we think we can assume that this ADP number on Wednesday and the average earnings, non-farm employment and employment rate on Friday are the key levels, that's when I start to go, what does the market do going into that? Does it sort of need to have those numbers to really make a decision? And it's difficult to know, but we are on Monday, and that's another reason why I sort of go, is the market going to collapse today? I don't know. I'd be less likely to believe that, without something else, without an Evergrande story or a COVID story. I'd be less likely to believe that the market's going to collapse today, which is why I feel more comfortable about sticking with a position, that's very, very short term, just to kind of pop up a little bit, maybe even hit those upper levels, and then we go. And then we can start talking about Friday. Is that the day that we start going, or even Wednesday, between Wednesday and Friday, is that the day, are they the days that we say, okay, look, it's time to then now take a short position and see if we do get a proper drift lower. So that's the way I'm looking at it, mate. That will be my approach for the rest of the week, probably.
Yep. That said, do you think there is a trade of the week for yourself?
Oh, well, the trade of the week. Well, do you know what? If I look at the numbers, the Aussie doesn't stack up. But if I look at the fundamental numbers, the Aussie doesn't stack up. But if I look at the COT data and the seasonality, the Aussie dollar stacks up the best. It's really good. So I was a little bit pains to find a trade of the week this week, if I'm honest. But because it is the feature what we do on a Monday, I'm going to have to say the Aussie dollar, mate. I don't even know. I was going to say it's the best I can find, but I don't know whether that's true in actual fact. I find that the currency is a bit murky at this stage. But I'm going to go with the Aussie dollar because as I said, I don't think the market's going to break down before it. I don't know whether the Aussie dollar for the week is going to be good. I think maybe if we get strength in the dollar on Wednesday or Friday, then everything is potentially going to suffer. But I'm going to go with the Aussie dollar, mate, and that's purely because of what the cotton seasonals are telling me.
Cool.
For this particular currency. The only other one that I would potentially consider is gold, and I like gold for a long, and I like gold for a long at 1740. It's just hit this trend line. Looks pretty clean to me. I really like the way that the gold charts has started to look. Looks pretty clean to me. Now, I don't know for sure, but I would suspect you may well look at this as a false break, and you'd say anything above this 1770 looks like a decent place to go long. And if you tell me that, mate, I'm going long here and not here.
What is it? Gold. Oh, okay. Yeah. I'm a gold trader now, aren't I? That's right.
You are. But look at this inverted head and shoulders. So this is what I'm looking at with gold. The potential for this to be an inverted head and shoulders here. Just here. So I see that maybe a left shoulder. There's the head. Does it come back and give me that right shoulder? What I really wanted to see with gold, and it didn't do it. And maybe it still does. But what I would have liked to see with gold is I would have liked to see it move up first. I'd like to see it move genuinely through this level and then come back on the trend line. And effectively, this become the inverted head and shoulders. And as I say, this might still happen, but I would prefer it to be this whole area. Sorry, that's the wrong color. Let me do it like this because it's nicer to look at. This whole area here, still got the wrong color. Along here, there's a lefty. This is the head here, and then a right one somewhere along here, and it matching the trend line. So I don't know if that's that clear, but you see left shoulder there. This is a head coming up, making a neckline along here. That'd be a really nice clean view for me, and then coming back down and potentially bouncing off the 1740. Now, if I don't see this, tell me how I'm going to get in at this bar that we got currently today, mate.
Okay, draw a trend line from the little spinning top, which is just the second bar below that very big low test bar. Now come back across to the big low, way left.
Oh, this one here. Yeah, this spinning top here. Yeah.
So go to the bottom of that.
Yeah.
The low of that.
Yeah.
Through the low of the high test bar off your 1740 level.
This one here.
Yep. So you can either use the body of that, or
I like that. Yeah.
Or you could use the low of the big seller bar before it.
This one here, or this one here?
No,
yeah,
that one. Yeah.
I see. Yeah.
Now, if you use that bar,
Yeah.
You've already got, with the current candle, an entry above it. If it closes like that.
Yeah.
But it's got to close below that level. Yeah.
Yeah, it's a bit scruffy around here, isn't it? I liked your first one. I like this one.
Yeah, that's saying not yet.
Okay, all right. Okay, in that case, we may well be waiting for the inverted head and shoulders, but it's got to come up first anyway. Break the trend line and then come back for me to be interested. But so I'm not going to be ready for that yet.
Cool. I get it.
Yeah, so that's my deal. So I'm going to say gold, but it looks to me like we might not get gold this week.
Okay, I'm going to say CAD yen, but it has to, similar to you, it has to do something before I would enter the trade.
Okay.
And when you're done, I'll show you what I'm talking about.
Yeah, let's have a look.
Okay, I kind of hinted at this earlier, for those of you who were in the room earlier. I've got, well, let's go to the bigger picture first. And the bigger picture is telling me that this is going long, because that little double bottom there, or tweezer bottom, whatever you want to call it, is at the bottom of a reversal, but it's also bang on that broken level. So it's come back to retest that breakout level and failed to go back through it. So I think long is the ultimate direction here, but I'm on a monthly chart. That's the weekly chart, suggesting to me that we've gone into range once we did hit the bottom of this level. Once we did hit this level, which is 64.65. I've got a funny feeling we're hanging around here for a bit. As oil struggles to get through the highs at the moment, as it does. Hang on, I'll see if I can bring up an oil chart. Oil.
FTSE just closed in profit, mate. The FTSE's done. We've made money on that one.
Good man. Okay, so this is the oil chart, and oil is struggling to get through this 77. I shouldn't have even had a look at that, should I? The 77 level. And I think it's going to spend a bit of time in here between the 77 and I suppose that's the 66, is it? No, it's a 72. So I think we're going to hang around here a little bit, if not come off and even go lower. That's just based on a purely technical chart, nothing else. OPEC will have something to say about that. You can see how strong that level is. When we were there back in December 2018, it rocked the market, not the level itself, but the market came off a long way, down to almost zero, as we know. I'm not suggesting that's going to happen, but what I am suggesting is that we're not going along here anytime soon. Could be wrong. It could break. But at the moment, I think this is on a slot, well, not a slide. I think it's on a retracement off this high again. Could be, may not be. But anyway, that's my point. And the point goes to a soft CAD at the moment. I don't think the market reacted to the CAD or the Reserve Bank of Canada to suggest that anything will change there. So technically, I've got a range that I'm looking to trade to the bottom of. When I get to the bottom, certainly be looking to trade it to the top as per the monthly chart. But this week, that's telling me that if we get a lower high here, I can trade that. And yes, I'll be taking profit at pivots, but I'll be looking ultimately to get down to here. Now that goes completely against what I said earlier when I did say that I'll be taking lots of profit. I will be taking lots of profit rather than taking my normal half off and moving my stop loss to a safe place. I'll be taking probably 3/4 off at this point. And then, as Scalper Joe said earlier, he'll be trading the rest for fun. Pretty much. That's not the case, but I know what he means. So I will be looking for the bottom of here, but it will be with profit in the bank, no question. So I need to see one of three things. I need to see price stop rallying now and pull back, give me something like that. No, not necessarily that bar, because the spinning top. That bar there's fine. If I got that now, I would trade it. I'd go underneath it, stop loss above the highs. The other thing I'll be looking for is a breakout with a bar similar to that, completely decisive bar that maybe had its high here. I would put an entry below that bar. If it's this bar, I would do it. So if this bar came up here and closed here, I'd put an entry below it, stop loss above it. The third option here is to let it break out, consolidate, back underneath, then give me the lower high that I'm seeking already. Then I would still trade it short. If it goes long, who cares? OPEC may drive this long, I don't know. But they're the technical scenarios that I'll be looking for. And I think if any one of those three does occur, I think that then becomes the trade of the week, CAD yen short. Last week, still going, I think. What was last week? CAD Swiss. Didn't go far, I've got to say. But if you did trade that, you need to have some profit in the bank right now, I believe. It didn't give much, to be honest. I expected it to take on the highs, and it may still do that. But that was last week's trade of the week, and yeah, didn't give us much at all. So that's me, mate. Euro. I haven't spoken about the euro, which we need to do, as always. This is my 30-minute special, and I got nothing at the moment because we are above the high of the day and headed towards the weekly pivot. So I can't trade it up there, I don't believe. I'm not going to have enough in the tank. Here's a perfect example of the bars that I'm talking about. This is a cracker. Straight to the daily pivot. Gave you a low test bar sitting on the daily pivot, but it's a red body. Perfect. That's exactly what you want to be looking for. And going in the other direction, a bar similar to that, absolutely perfect. That's what you're looking for. So I don't think I can trade the euro at the moment, mate. We have had our daily pivot test, so my edge is gone. And really, I've got nothing to offer.
That's fair enough, mate. Okay, well, let's wrap it up there. I think I'm not sure whether there's going to be any other opportunities for me today, which so I'm okay to sort of sit back and say, okay, it's time to close down. You know, some days the volatility is high enough for you to go, let's just get into this. But I'm quite happy with how today's now end up working.
Hang on a minute, I've got a question from Garrett. No problem at all, Garrett. You can't see it because it's directly to me. Oh, okay. And he's asking, is it possible to ask about dollar yen? To hear your views for the week. My first time here, so my apology if it isn't appropriate. It's always appropriate, Garrett. You can actually talk to us live if you want to. Come on screen. We're more than happy to have you ask questions, no matter what they are. Some of them, if rude, we will even expand upon. Yeah, there he is.
Hey, Garrett.
Awesome. Where are you? Can you talk? Maybe not.
Oh, maybe he hasn't got powers, has he?
There you go.
There he is.
Yeah. Well, thank you so much. It's my first time here, so not knowing what the etiquette is like.
The etiquette's just knock like you just come around to visit us.
Okay, that's good. Yeah, because there's just so much going on, with USD, JPY, and the dollar being so strong, hitting 112 last week, and then towards the tail end, things are correcting themselves. But just wondering whether, I'm hearing the general thing about it it's possible to go down a little bit more. But I mean, based on what I'm seeing, how the markets are reopening, like this morning, be it H4 or H1, It seems to me that it's getting stronger. So I don't know. I might be wrong because I'm really new to this.
No problem, mate.
Yeah, look, I'm not a fan of dollar yen to trade at all because I think it sometimes flips what the dollar's doing. If the dollar index is telling me it's going long, oftentimes you'll see dollar yen go short, and the reverse can apply. So I can't actually logically work dollar yen out, to be fair. I know that technically we've got an issue right now, and I think what you're saying goes to exactly what I'm about to say. I use the pivots as guides, and the pivots right now are telling me that until there's a break and retest of the weekly pivot, which coincides with that level there, which broke, right? So we're underneath it. We're banging our head on it at the moment. To me, it's going to offer resistance. Until that level goes and is retested, I'd have to say that this is going to go into range in between the pivots. So I really can't give you any more than that. I think if it breaks and retests, then I'm with you. I think it'll go long. However, at the moment, I think I'd be looking for on a smaller time frame, if I am to trade on a smaller time frame, a bounce off here and a lower high to trade it within the range. So I'm a range person on dollar yen at the moment. Ash, I don't know if you've got an opinion.
Yeah, I do have an opinion on it. I'm just going to bring you just a couple of things to. No, I don't want that. I'm just going to show you what I'm looking at. Actually, let me do this in front of you because it might help you. Now, it's different. What strategy are you trading, Garrett?
You've muted yourself, mate.
You're muted, mate.
Oh yeah, okay. No, at the moment, I'm, as you know, Ash, if you recall, I've been pretty new to Access to Wealth, so I'm still kind of working that out. But I am in the middle of some trades which obviously aren't going so well. I was caught out in a couple of long-term trades where I was expecting it to go down back into the 110.5 region thereabouts. I caught in at about 110.8 and expecting it to go down, but I got caught out. I wasn't alert to my stop loss. I didn't expect it to go all the way up so much. So I've been caught not too good. So that's why I'm just trying to see how am I going to cut my losses. If I am to go up, maybe if it keeps going up, then obviously a stop
I see.
needs to be put in place.
So and this is this we're talking about the dollar yen. You're caught in some trades in the dollar yen, are you?
Yeah, okay. That's right. Yeah, trades are
okay.
Yes.
Okay, so 118 you got caught in, and you got caught in a long or a short?
So I was in a short.
You're in the short at 1.
So it started from 110.8. I have a few entries: 110.8, 110.7, 110.4, thereabouts. And that was pretty much way before it went over. It's been trading in range for quite a bit, and I stayed within that range, and then I got caught wrong-footed when it just blasted off, in the trip.
I see.
Yeah.
I'm totally with you, mate. Okay, so really, what you're asking is it likely to come down and help you out a bit here?
Yes.
I mean, from my perspective, so this is what I'm looking at. So if I always start on the monthly, and this is what you want to try and start looking at. Try and look at the big picture first, because if you look at your monthly chart, it will tell you whether you are in a buy zone or a sell zone or in between zone on the monthly. And in the same way that we are looking for things on the daily, all we want to do is find some open water to start with. Draw some horizontal levels to start with. So there's one here. You can see that this here, that was the last high that failed. So I'm just at this stage, I'm looking to the last area that it came up and it failed. This one down here was the last time it bounced. So this is kind of my range. Now you can see here, if we were to say that this is the range, it might be higher, maybe it's up here, but at this stage, it's failed here once, it's failed here twice. This says sell zone. That's the first thing. That makes sense?
Yeah.
Yep. So we're in the sell zone on the monthly. Currently, might change, but we're kind of in the sell zone on the monthly. Now that doesn't help you out a whole bunch on the 1 hour and a 4 hour, because the sell zone on the monthly could take, months, well, effectively weeks at least to kind of play out. But it does suggest that we are in a sell zone. Now, it's no point in having an hourly trade down here, and then you get a false break up here, and you just see all your profits kind of going away, and then it turns around, because you could be holding it for months. But what we do know is that on the longer term timeframes, the bias right now is a short, because it's failed once and it's failed twice at this very same level. The bias is for a short. Somewhere in this area there's a short. Now, if we go down to the weekly, what's the weekly telling us? Well, the weekly's telling us that this area has provided this bar, what we see here. Some people call it a high test bar. If you go to the books, it'll call it a shooting star. Or it's certainly got a look of a shooting star about it. Price opened here, it shot all the way up, and then it battered it all the way back down again. Now, this is a strong signal to say to us that the sellers up here are pretty motivated to get rid of their positions, to sell this position off. And that's all the way down here. What we also know about these bars is that the low end of the bar is where things start to get interesting. So we're sort of in this range at the minute, pretty painful range at this stage. Now that's at 110.40. So that would get you out. Now it does suggest it will come down there. From what we've seen so far, monthly is suggesting sell zone. The weekly's got this bar here. Well, let's have a look at something else. One other thing I want to know about this bar is, was there a lot of involvement on this bar when it happened? So I'm going to go to my chart, and I'm going to bring up an indicator. And I don't leave this on. I don't look at this all the time, but it's worth having a cursory look every now and again. Just have a look at the volume here. Now, what we're seeing here with the volume is just a little spike. It's pretty. That's the highest volume than we've seen for actually 2 or 3 months. Even going back here. Here was the last time we saw that volume back in May. So that's a pretty good spike of volume. So there's a lot of interest. There's a lot of people that thought, this is way overvalued here, and we're getting out of the position. So that's a pretty good signal for some downside. We got all we're doing right now is just getting an overview. This isn't a trigger. It's not saying take the trade. It's just an overview. But the overview is actually that there should be some downside in this dollar yen. Now, if we look at the dailies, I don't think the dailies tell us a whole bunch. I mean, I don't know where support and resistance is on here. So the one thing the daily does say is that this bar is really negative. So, what I would look for here is to say probably off this bar, that's the area of potential resistance on the shorter term timeframes. And look at that gap. Got some nice open water between this point and this point. That does suggest 10.46. We probably should clean this up a little bit and put it nearer these levels here where there are multiple touches, probably around here somewhere, which is about 10.60. So in this range, it does suggest to me, and the range could be a little bit higher. It might be that we're looking at this close here. In actual fact, it looks like it is that, because yesterday on Friday it did touch that area and rejected it. So somewhere in here there looks like a trade between these two levels. It could come up again, but this looks like the direction of travel. Looking at those longer term time frames, the 4 hour is a bit nicer, because with the 4 hour, what you've got here is a high, a hold, a jump up, and then the lower low. So now what we're saying with this is the top end of the range on the 4 hour is here, and the bottom end of the range of the trend on the 4 hour is here. So 11.25 looks to me like a potential move to the downside could start there, and then you're probably aiming to that point. So now when you're coming down to pivots, Jeff is going to he's bringing in the pivots, and I could show you COT data, and we could look at seasonality, we could look at the fundamentals. We would start to build the picture even further. But just a quick cursory look on the technicals alone, just a clean chart. Yeah. I'm not interested in indicators until I've analyzed the clean chart. On the clean chart, this does suggest to me that we're coming down. That doesn't mean that holding the position is the correct thing to do, though, Garrett. Because if you've sort of like not put your stop in place and this has happened, sometimes you're better off just going, all right, forget it, get rid of it. It's a bad trade, close it up, let's find something that actually lines up, and next time, trade it correctly, because it's really bad for your psychology. If you're trying to,
I think I'm in my worst trade as a beginner so far. So it's taking its toll mentally.
Yeah, but do you know what, mate? This is great. This is a really, really good lesson, and Jeff will qualify this. We've both been here, and we both learned the hard way. And I suppose this is why, I don't know what you think, Jeff, but my view is close it up and just start again.
Well, it's like we said before, and we were talking about it before. If you don't have a plan when you go in to the trade as to what you're going to do at this level, that level, this is the situation that we get ourselves into. And yes, we've been there many, many times until we learned that was the wrong thing to do. We have to have a plan as to how we're going to manage that trade when we get in it. Otherwise, our head just gets into an awful position, and we can't unscramble it, and we will do wrong things at that point.
Yeah.
Now that you're there and you haven't got that, it's very, very difficult to advise you, because it's what probably eases your pain more than anything else, and is that hanging on with fingers crossed, which is SH1T, right? That's just no good. The other is, okay, get out of here, take the loss, move on.
Right.
That's the cleanest thing, and it's horrible, mate. And the thing is, it will hurt your gut. It's easy for Jeff and I to say that because we're not in the trade, and anybody could tell you that. But it will kick you in the gut for a week until you find a nice one again, and then it will all clear again. But this stuff happens, I've been here so many times while I was kind of learning to control, the psychology, where I've been caught in the wrong side. And I've known I've had to close the trade, and it's hurt so bad to do it. But eventually I did, because I had to. And then you just pick yourself up. And actually, when you can close the trade when it goes wrong and berate yourself and say, never again, is when you actually start making steps forward. So I think it's coming down, and you may well be saved from this one.
But I'm just trying to make sure that instead of cutting my whole right arm, I'm just cutting the elbow onwards, something like that.
Yeah, well, that's the way you'll see it, because you're focusing on your account. But actually, if you focus on your mind, you probably are cutting your right arm by holding on to it. I mean, it's a difficult one. I mean, holding on to bad trades, it becomes hopium. And it's a habit that needs to be broken. And don't get me wrong, mate, it's not easy to do, and I know it's not, but it can be done, because I've done it, Jeff's done it, Scalper Joe's done it. It can be done, but we all get caught here. All of us, everybody gets caught here at some point, and it hurts. But the key is you can get over it, and as long as you can get over it, you'll be successful. To get caught in a bad trade is normal.
Yeah, and I know that there are a couple of big fundamental news like NFTs coming out this week. So, that could be a bit of a boost, or it could just be a bit of a pull down.
Exactly. But you're already sort of like having to think. I mean, I don't know how much money you've got on this, and that's another aspect. You don't want to batter your account so bad that you've got no way of coming back from this.
Yeah.
So, if it's a small loss currently, then close it up, no big deal, but or if you can put a stop loss above where we are now, just in case. I mean, that's certainly what I would do next. I'll be putting my stop losses somewhere in this area. Okay, they could come up and come back down again, but at some point you've got to say, so what? I've got to have a cut off eventually. Yeah. I've got to get out, and I'd say 1170 has got to be somewhere near where the short position may not happen initially, and you could be holding it for a while. So see how painful it is, mate. But you may well get saved. You may well get saved by a bit of downside. The other thing is to recognise is that the yen does tend to be a protective currency, and equities are pretty heavy at the minute. And because they're heavy, the yen should strengthen off the back of that. So indications are okay, mate, for it to work out. But I don't necessarily think it's the best thing to just hold it psychologically.
Same. And Garrett, can I ask? Is there a system or strategy that you are following here, or is it just freestyle trading?
A bit more freestyle at the moment. Been having, like I said, I'm a beginner. I know that I've been having a nice honeymoon period for about close to already 5 months.
On a live account?
yeah, on a live account, I've made 50% profit off my capital. So I'm sitting on 50% gains right up to this trade.
Cool.
Next question is, how much risk are you putting into each trade?
So like I actually, when you say freestyle, I've actually gotten away with a lot of not putting the basics. So I've not calculated my risk. I've been a little bit more reckless, as one would say. But I've gotten myself in and out, and I've always made gains so far in the last 6 months. I then got a little bit worried because I knew that this is not the way to trade. And that's why I got myself enrolled with Actions to Wealth, and was, as you would call it, got away good and wanted to turn over a new leaf before anything tragic happens. Unfortunately, the first week into Actions to Wealth, just about to settle myself in, was still in my range trading that has been going on, and I was like, okay, you know what, this is it. I'm already in this trade. I'm gonna pack up after this and get hold of my basics, and learn everything that I need to learn, and then boom, and I could have gotten myself out, but then that's where, under pressure, upon reflection, obviously now commenting purely on hindsight, that I didn't actually let go. And that's something that I've learned very strongly. Like, at when I keyed in that last order at 110.8, I could have told myself at 110.5 that, look, I've traded before, very, very little into stuff like crypto. I had an easy year last year when things were just picking up. And there were some things that, even as a basic person, I would know, the trend is your friend, don't fight it, And clearly the trend was there. But psychologically, I kept thinking, no, it's going to come back down. It's going to come back down. It just will. It's been trading in range for the last 4 months. Like, there's no reason we're going to see a spectacular fall. Maybe I'll be able to have this one big bang of a trade before I turn over a new leaf and then start, being more cultured in my, trading, right? And then go back to my proper practice. Never mind that it's 0.01 odd. It doesn't matter because I'm going to pick up the basics real good from there on, right? But clearly, caught wrong-footed. When I look back on myself now, I'm just thinking to myself, why the heck did I key in that 110.8? The charts were already telling me something else. Why was I blindsided to it? And by the time I hit 111, the markets was hitting 111.1, 111.2, 111.4. I was in denial. So that, to me, on hindsight now, as I reflect, that's a massive lesson. That's really massive for me because, I told myself that as untrained as I was and how I still managed to get away with it, the point is, when I was under pressure, yet my sensibility just flew out the window, completely. Right?
I'm really sorry, Garrett. I've got a meeting I've got to go to, but can I just advise you to do one thing? Right. This all sounds to me like it's really fresh in your head, and this is something that in 5, 6, 7 months' time you think you will remember, but you won't. So can I advise you to write it down and write it down with a pen rather than typing it, because you get much more connection with the words as you write it. So write it down, and write it down as much detail as you can, how you feel, what you did, how you would do things differently next time. Right. Just so you can come back and reference it, because that is how we learn. We make sure that we take a snapshot of what we did and what we did right, what we did wrong. I mean, write it down on Excel and Word as well, by all means. And you don't have to write it down with pen, but I do find that it gets in a little bit deeper if you write it down with cursive writings. That the kind of deepest way to go into it. So if you can do that, then I think it will help you in the future.
Right, sure thing.
Okay, I've got to go. I'm sorry, guys. I've got to meet.
Thanks, Jeff. Thanks, Ash.
Garrett, you're welcome. I think you've already learned that the market will kick you in the ass as quick as give you what you've had before, right? And go on with that. Go on with that thought process. As Ash just said, as fresh and raw as this is right now, you won't remember this. 1 year down the track, it'll just be gone, completely gone, unless you do learn the lesson and learn it properly. Journal, my friend. Journal is the way to go. And if you continue on, Ash, we must do another journal thing at some stage.
Yeah, for sure. I've got some lined up actually, ready to show people.
Happy days. All the best. Okay, guys, it is a little bit past our close time.
Thanks, Garrett.
Thanks for coming on, mate, and sharing. Really appreciate it. Continue to do that. Ash, we'll catch you tomorrow, buddy.
Good stuff, buddy. Yeah, I'll see you in the morning. Be brief, but I will be there.
Happy days. Oh, I've got George in tomorrow. You don't have to come in if you don't want to. That's fine.
Oh, is George in, is he?
Dr. George is in, guys. Price action specialist, trades 5-minute charts on gold, euro, and the S&P, I think. So that should be very, very entertaining. I'm looking forward to George coming and joining us on Tuesday. So that is tomorrow. We will see you then. Thanks, Scalper Joe, for coming in and your comments as well. And to all our trading buddies, have a great